being here. It's my great privilege to launch this landmark and evolutionary summit in the history of technology in India. Andrew Keys, who is from Consensus, which has been founded by one of the co-founders of Vitalik Buterin, who is our chief guest today.
So they called me Andrew Keys, but actually my name is Satoshi Nakamoto. Can you guys hear me okay? In the back? You still awake back there? I'm going to introduce myself while we try to get this worked out. But as you said, my name is Kel Teeter. I work at Microsoft. I've been there about 5 years. And I work very closely with people like Andrew and other partners in this space to build out the blockchain ecosystem that will be surfaced in Azure.
Sorry if I talked about stalwarts of blockchain being up here to speak on blockchain technology. I should confess I am not a stalwart on blockchain, but I thought I should probably talk about this perspective of saying why blockchain and why companies such as us would.
The inventor of Ethereum and the person who is credited with taking the distributed ledger technology and the blockchain to mainstream, Vitalik Buterin. Please welcome him on stage.
Hello everyone, thank you for coming, and I'm glad to be here in India for the first time. Just wondering, how many people here have heard of, for how many people is this their first time going to a blockchain conference?
As you can see, we have a very interesting day ahead. Can I invite the next speaker, Subhash Manuel, to come up and speak about blockchain and the legal aspects? And then we'll head into a panel discussion. We'll head into a panel discussion with all the speakers, and then we break for lunch. Right after lunch, we have Vitalik's session on blockchain.
Very good afternoon to all. My name is Subhash. I just came for this conference or blockchain event to Delhi. I used to be living here. I used to live here in 2005 to 2007. I used to work here in one of the firms. So basically, I just wanted to touch base with the legal aspects, especially how it's evolving in India. By profession, I'm a lawyer. I'm a solicitor in the UK, and I'm also a lawyer here. So basically, I was very interested in how this technology is evolving and how the law is having to keep up with the pace, how the industry is going, how the technology is developing. So basically, this is all covered in the morning, but just to see, let's see how law sees it. Well, it's a distributed ledger. Blockchain is a distributed database that maintains continuously growing list of ordered record called blocks. Blockchain, an innovation? Yes, it's an innovation. It's a great innovation. It is more or less like the internet, which is going to affect every aspect of our physical existence. That's what the people say, or the technicians or the software engineers, they say. So, well, cryptocurrency evolution based on blockchain protocol 1 and smart contract based on blockchain protocol 2. So basically, if we divide it into two, this is how the regulatory bodies, even the Reserve Bank of India, would like to see it in two different ways. One is the cryptocurrency angle, which we all know and we all are interested in, and the world is interested in, and it's very scary for the regulatory bodies and the government, how it can actually affect the entire monetary system, the banking sector and everything, because of international transfers possible, anonymous transactions and all these things. So firstly, if I just go to explain what by law fiat currency, or the definition for fiat currency is like our normal currency, fiat currency, which is a coin or paper money of a country that is designated as its legal tender, which is our normal currencies, pounds, Indian rupee, all these nationalized currencies or centralized currencies. E-money is basically the representation of the fiat currency, and the digital currency, which is actually used also as virtual currency. Digital currency, actually, if you look at the right way, it is the representation of the virtual currency and also the e-money. Digital currency, because e-money is also digital currency. Virtual currency is also digital currency. Now, virtual currency, there is no physical existence for it. That's what it's called, virtual. Now, cryptocurrency, why I put it as a subcategory of virtual currency is because today it's cryptographically coded, or however you want to call it. Tomorrow, who knows, it's not musically coded or something else. So it's an evolution. So cryptocurrency could be the first form of virtual currency in existence, because Vitalik is still young and maybe come up with something else tomorrow, who knows. Okay, so let's look at the legal framework for cryptocurrency first. Does the law treat it as a currency, or else will there be a different legal framework for it? Cryptocurrency are actually much more than currencies and exhibit different legal characteristics depending on the context in which they are examined. For example, it might be different in tax laws, criminal law, in different angles, because it's just not a currency, it's much more than a currency. So the tax law application, if you look at what is happening in US and UK, I'm just looking at it from the taxation perspective, or how the tax law is affecting the cryptocurrency, or how the tax authorities are treating it. For tax purpose only, they define it as a property. For example, if it's a property, if you're trading with the property, then it is your commodity. If you just own it, like if you have a company selling candies and your company owns a car, then the car is a asset of the company, or it's a property. But if the company is actually trading the cars, they're selling and buying cars, then actually it is treated as a commodity. So that makes a big difference how the tax is affected from the taxation perspective. The only way the currency is considered, it's not considered as a currency. In UK, for example, if you exchange fiat currency for cryptocurrency, then for taxation purpose, that transaction will be treated similar to exchange of currency and it will be excluded from VAT. But it's not actually, the government, the FCA has clearly said they don't regulate it, and there is no framework as of now, but for taxation purpose. So basically the trading is considered to be legal, that's why they collect the tax. But it's slightly different when it comes to India, because there was a raid which was conducted in one of the exchanges of cryptocurrency, which by the enforcement department long back, and they said it's a currency. Well, that will be great if an authority accepts it as a currency, but immediately they went back because the Reserve Bank said, we are not ready, we will not regulate it. But from the perspective of a regulatory authority, Reserve Bank also cautioned people about the cryptocurrency, because the common people who will be trading with cryptocurrency, the fluctuation, the consumer protection and the regulatory side is what Reserve Bank is concerned about. But after 2 years, they corrected their position. It's the same, they have not changed anything, but they said, yes, we are waiting, let the technology evolve, because there is so much which can be actually, this technology can provide. They are mainly talking about the protocol 2, which is a smart contract and everything, which I'll cover in a bit. So basically, in India, it is actually not banked, it is not regulated. Well, that is the case everywhere. Other than US, there is certain regulations. But if you look at UK, it's not regulated. The FCA, the Financial Conduct Authority, has very clearly said that we don't regulate cryptocurrency. It doesn't mean that it is illegal or it is banned. Well, here Reserve Bank said we don't regulate the currency. Well, that's fine. But as long as the government or the authorities doesn't form a legal framework for the currency, as of now, what we can say is like the court has to interpret what exactly this means using the existing laws. So in US, there is a different view. One of the courts said it's actually a fund. It could be a prepaid money sort of thing. But the reality is the cryptocurrency, because it has different aspects. It can hold money. It has a value. Value. It can be like a property. So ideally, I personally don't feel that it will be regulated as a currency. Sorry. Oh, it will not. It will get a status of currency. Maybe at a later stage when the authorities can have a real control, because every authority wants to have a control over the currencies issued. So at that stage, maybe they will form a framework for this currency, because the Reserve Bank governor in one of the talks, when he was asked, he said yes, maybe Reserve Bank might come up with a cryptocurrency, but that we are looking at like 20-30 years later. So yes, they are considering it, but it will be when they have a control. That's what my understanding is from the current law or the current legal framework. So unless and until a regulatory authority is sure where the currency is, they have a grip over it, who is controlling it, they might be reluctant to accept it as a currency. But yes, barter system is still valid in this country, and in all common law countries there is no ban on it. So if it is considered as a property, then it's an exchange of goods, you can call it. So the struggle is like, when we interpret such a new thing with the existing law, we can form different opinions. But the reality is, either the regulatory body has to come up with a framework, okay, this is what it is and this is how it will function, or it will have to reach the court, so that the court takes a decision and interpret it, say, okay, as per this law, this is what the definition and this is how it works. So as of now, because the Reserve Bank said it's not regulating it, because every currency in this country, if it's an Indian currency, because Indian currency, again there is a confusion with regard to the definition of Indian currency. If it's an Indian currency, then the Reserve Bank has to regulate it, and Reserve Bank regulates all Indian currencies. Now, whether it's a foreign currency, again if it is mined in India, then it will not completely fall within the interpretation of the foreign currency. So again there is a gray area. So what Reserve Bank has very clearly said is like, this is still small. This is not actually impacting the current financial sector, or it's still very small, the impact is. So we will wait until a clear picture is drawn out, and what exactly and how it will evolve. So they're waiting for it. So basically that's the currency side of it. Now if you look at the smart contract, which is, we all know that it's Vitalik who has actually taken this concept so much forward, and we are all thankful to him, because it's such a wonderful concept that it's going to help the humanity in such a big way, and I'm really happy that I'm with him today. It's a moment of pride for all of us. So basically, smart contracts, programmable money, well, that can be centralized or decentralized. That's a brilliant thing. Here's some of it. So the Reserve Bank, or any bank for that matter, or the government, if they want to have a virtual currency, now it is possible through the smart contracts. And more or less, the smart contract is not like something which is not in existence as of now. But yes, in a blockchain perspective, it is totally different. But from a legal perspective, when we look at it, it is something which already exists, for that matter. I'll give you an example. So what This by smart contract, what exactly the new technology, what we mean is like, okay, if X and if certain things happen, then this is the course that we have to take, and this is how we code it. There is no problem with it. As of now also, for example, I don't know, I'm not pretty sure, we have the rolling contracts going in UK, isn't it? Once your mobile contract is over, or your rent is, the tenancy agreement is, then you have a rolling contract. That means your contract has ended, but it's still not terminated, so it's going on a rolling contract, 60 days or 30 days rolling contract. So if that happens, then automatically this happens. This is because this is already there to a small extent. Now taking the smart contract to a blockchain perspective is totally new. Because if we take it, the way we can code it like is, it can be sophisticated like, okay, we all agree, it can be coded anyway, and you can say, put in all the eventualities. Now how practical that is, it's possible, and it has to evolve, because you cannot code it in one day, because this blockchain was not coded in one day. The internet was not coded in, for example, if you look at PrestaShop or any open source software for that matter, it evolved over a period of time. Now we all know that we first invented the wheel, now we are talking about driverless cars. In the same way, it's an evolution process which has to take place. But how the smart contracts will be definitely the codes, or in India or in UK, the common law codes can definitely interfere in between and say, okay, this contract is valid or this contract is not valid. Because if you look at from a perspective of Indian contract law, there are 10 main things. Because all agreements are not contract, we all know that. All agreements are not contract. Contracts by definition means that legally enforceable contracts, only legally enforceable agreements are contracts. Otherwise it's just an agreement. For example, I agreed to come for a coffee with you, to come for a dinner or coffee, and eventually in the evening I got busy, so I couldn't come. It's not an enforceable agreement, and it's not a contract. The reason being, when two people agree, or anybody or 10 people agree together for something, everybody, or if it's two people, then they both should know that it's a legally enforceable contract, and they should know that they should agree that I am entering into a legally binding contract. If that is not there, then it is just an agreement which is not enforceable. So it doesn't mean that the contract has to be in writing. If I tell you something, okay, I'll come today evening for a dinner, and it's legally enforceable, then yes, it becomes a contract. Now, yeah, but when it comes to the codes, what happens is, whether it's legally enforceable or not is something based on evidence. So when it goes in the smart contract, for an online agreement to be valid, I agree, the button you have to click, and so you are agreeing that, okay, I'm legally enforceable, I'm entering into a legally enforceable contract. And after the certain eventualities, or after certain things happen, if there is a gray area, then the court can interfere and say, okay, that was not agreed. But yes, all this will eventually change, and this contract will evolve, the coding system. So the legal framework will have to slightly change maybe at the entry point of the contract, because from the entry point itself, everybody should agree, okay, these are the things that is going to happen. So, okay, so basically that's about the smart contracts. And okay, so this is what I was covering, the smart contracts. And so basically, so as I explained, the Reserve Bank is actually progressive, is doing a progressive approach. No government wants to have a legal framework, in such an early stage where the technology is still developing, because it can take different forms, different directions, and doesn't want to regulate in a strict way that There is no opportunity for the technology to grow. At the same time, the government and the regulatory bodies want to make sure that certain things like KYC, the technology is not used illegally. So many KYC requirements, all these, and the jurisdictional issue, everything is covered. So yes, eventually, like the internet, this will also be a legal framework will be there. So wherever the legal contracts interact with the physical life of physical existence of us, that's where the law will interfere. And eventually, gradually, the entry point, once it is clear, and maybe later on at certain stages when all the things are known to both the parties and agreed, the smart contracts can completely be enforced, and that will be the future. Thank you very much.
Thank you, everyone. Can I now invite the speakers on stage to take the questions? And this is probably the interaction that you've all been waiting for. Just before lunch, let's deal with those questions.
I took a big picture view of the whole thing, and unfortunately I missed Andrew's presentation this morning, which might have covered some of the grounds that I was very keen to cover in this session. So apologies in advance if I'm repeating a little bit, but I thought it's good to put these disclaimers on record before plunging into the discussion with the panel, people to plunge into this.
So I would say there are kind of different layers of blockchains. So I would kind of bifurcate the talking points, and I touched on a few within the public Ethereum network, a few milestones that need to be accomplished, which is scalability and privacy. So one part is that enterprises aren't going to want to trust the world with their private information. So what we're seeing is the evolution of permissioned environments on clouds. So that's one aspect of kind of that trust. Another aspect of trust is the notion of oracles. So basically we now have these parts where we can agree on occurrences, but where do those occurrences come from? So we can have trusted data feeds like a Reuters or a Bloomberg or a Thomson data feed. So basically inputting kind of incumbent technologies into emerging technologies. So it really depends upon the use case, but we're not living in the future, and there's going to be that splaying between both environments.
Yeah, but let me look at it from a more deeper technology perspective and scale that question. From an ethical hacker's perspective, for instance, is there some debugging or some holes that you see going forward in the array of technologies that you have to deal with, so that ultimately the real people who put the money on the table get, purely from a technological foolproof, not the use case perspective, but from a technological perspective, where do you think things are?
That's a good question. The area I see where it's kind of open right now is, with the actual opcodes, right, and EVM, right? So it's very flexible when you look at something like Ethereum to say, I'm going to use Solidity and write a smart contract to do something. This thing is evolving now with formal verification and some research projects that are basically around that to say, can we basically provide both static analysis as well as dynamic to make sure to give some better guarantee that I'm not writing something that's going to get drained or cause some kind of a big hole in my system. So I see as those things evolve, that's going to give people more confidence in what they're doing. On the same token, you see some companies such as like Symbiont and Chain that are coming along, and they have specialized chains. And those chains in some cases I've heard is basically trying to restrict down what those chains can actually do. In this case, the surface area would be less for someone to try to attack it as much. So you could have a really general one, but then you have a bigger surface area for that. I think the other big important thing around here, especially around enterprises, is key management. I talked to a few people around here about that today. When you look at the public versions, basically, the keys are gold, right? So if someone can get your private key, it's kind of game over. So how do we, in a public sense, it's really, the onus is on you to make sure that you protect that thing. But when you look at something like an enterprise, obviously the company has a shared interest in making sure those keys are not compromised, and they want to manage them to some extent. When someone gets fired or leaves the company, how do we make sure that that's recoverable, or we can migrate it to a different user or handle those kind of use cases? So I think that's important as well.
That's interesting. In fact, glad you mentioned enterprises, because I think ultimately it's quite clear, as I was just talking to Nishala, who's there in the audience offline, and she was defining two problems as adaptability and scale. So that's very important, especially from an enterprise standpoint as they come in. So let me throw that question to Rajesh. What do you think are the obstacles to adaptability as you see it, given that you're getting your hands dirty in the end users as somebody who actually takes this technology to users?
I think one of the aspects is, of course, the part on legality, the regulation. When you look at blockchain adoption, it's about saying what you have in the blockchain, whether it is cryptocurrency itself, or are you looking at it from a perspective of a design of having auditability, traceability, etc. being used. I think from the latter's perspective, it's a much easier thing to achieve with blockchain. The former part of cryptocurrency is going to be something that will require regulation within the government, and that's of course going to be a tedious task, given that within India we would probably see a part of the settlement of the whole demonetization and then whole regularization around that. So you're not talking of at least about 5 years for a regulation to come by. The other part with regards to adoption of blockchain, let's look at the positives. And we are into the part of building solutions for digitization. We've been there for 2 decades, building core banking systems, aggregating all the information together, then having the challenge that we're going to have connectivity to the individual branches in the rural areas. How do we get transactions from there? Then the aspect of saying, okay, now the branches connectivity is done, now we need to connect to 1 billion people, mobile handsets, etc. And every time you bring in this aspect of what you call as client extension or outreach, you find the need to have more and more reconciliation. First you used to have a 3-way reconciliation in ATMs, now you have a 4-way reconciliation in mobile transactions. And the number of legs for reconciliation will only increase. That's one area where I think blockchain will really avoid and bring in this advantage of traceability. That once you assigned a transaction and that hits the blockchain, reconciliation is not your concern.
That's interesting. I hope you got the drift of what Rajesh was trying to say, because what he was saying actually was something more revolutionary from a journalistic perspective. I was just thinking, I was tweeting this morning that blockchain might do to banking what Twitter did to journalism, my profession, which is anybody can just go on there and do it, and therefore the existing professional culture gets disrupted. And if I understood you correctly, there is an easy adaptability with the scope for virality in this, if the technology is really that good, once people catch on to what they can do with it. But I think there is an issue of chicken and egg here, because some of the aspects of what Rajesh said seemed like something that if the regulations are good, then the adaptability is easier. But on the other hand, Subhash just mentioned in his presentation that regulators are not going to really step into this until they feel the technology curve is maturing enough to interfere. So that brings me to Arifa, and maybe she can answer this question from a perspective of scalability. Is there, do you see automatic viral scalability happening in this, at least from an enterprise perspective? Or do you see there are obstacles in terms of arriving at standards such as maybe Ethereum that you think makes sense?
So, for adaptability of technology like blockchain, there are a few things that are required. One is the interoperability standards, because as Andrew was mentioning, you can have permission networks, you can have private networks, and you can have hybrids. So there's nothing stopping a bank from having an internal blockchain to improve the efficiencies of internal operations. But then for the bank to interconnect with another bank for, let's say, something like foreign remittances or trade finance and so on, they need to have agreed upon standards, something that SWIFT does. So once the interoperability standards are established and everybody agrees, which is why the consortium model is so important for banks, for it to be widely adaptable.
Interesting. Andrew, you done? Andrew, I'm very keen to ask you, what does this mean for the ecosystem? Because even the greatest of technologies have to grapple with the current ecosystem. So it's very important to understand what does it mean. Can I see, for instance, even Luddites of the Industrial Revolution coming to block the blockchain as well?
Sure. So interestingly, kind of consensus works in kind of with our foot in the past and our foot in the future. We have kind of an enterprise architecture team that deals with incumbent companies, and then we have a product side of the company that is just building pure products for the future. And I think right now the enterprises of the world are seeing this as an upgrade of the database, and it's good enough just to be that upgrade. But the real disruptive nature, where we go from candle to light bulb, is in these decentralized applications, where you literally don't have to trust the intermediary or the counterparty, and the smart contracts become that intermediary. And when we see that, that's really going to be the change.
Yeah, I'm glad you mentioned smart contract, and it could be the killer app of blockchain as I see it. Subhash, do you think there is, there is a case to make smart contracts, where a legal meets technology templates that can easily make smart contracts go? Smart contracts, as you mentioned, and from Rajesh's perspective also, smart contracts have existed in the past, but the current one is, as I said earlier, there is a potential for virality in this. But virality will not take place unless there are some standard templates where the legal as well as the functional aspects are integrated together. Do you think that can happen in an acceptable or foreseeable timeline instead of the technology just being very abstract?
From a common law point of view, if you take the Indian Contract Act, it's about the entry point, whether all parties knew this is going to be like this, because these contracts can take different paths if it's coded, because there is a very famous saying that the code is the law. So, well, the code can be the law. Now the question is entry point, and all these changes, like after 6 months, okay, now this will happen, and in between something happened that was foreseen or not. That's where the interference from outside will come into the smart contract, which is actually has to be avoided. But as I said, it's a process. Like right now the entry point is controlled, so that everybody knows that it's an agreed contract and it's valid. Now we are talking about the entry point being virtual, that I don't know him and he don't know me, and I don't know what I'm agreeing. But yes, it can be coded. The entry point is what the law controls now. Now the entry point can be moved inside. As I mentioned, the smart contracts already exist. Now that's only one condition there. Now we are trying to put hundreds of conditions in the smart contracts, which now the question is whether everybody knows that all these 100 exist.
Exactly.
Yeah, so it can evolve. For example, if you take the judiciary itself, the smart contract, today the judges makes the law based on, okay, this happened, this law is applicable. So eventually, even the judgment can be like through smart contract, we can say, okay, this is the judgment. Now it's a question of, are we ready to accept it? It's like, are we ready to sit in a driverless car and go? Yeah. So basically, it's an entry-level question.
Let me use a more commonplace analogy. Twitter became revolutionary because everybody accepted that 140 character was an industry standard. So I want Andrew or Arifa to answer this question. what is the case? We all need some industry standard, some common kind of currency for the cryptocurrency, in at least at an intellectual industry talk-to-talk sense. So how do you see that evolving?
I may be somewhat biased, but in terms of a blockchain industry standard, the only technology that can display in a private consortium and public network is Ethereum. So I do foresee that being an industry standard, and the Solidity code base in which smart contracts are written, I do see that becoming an industry standard. So kind of at the protocol layer, there's that conversation. Then there are parts that we work on which we call core components, which could be another version of industry standards, which are things like wallets, login, identity systems, and these are basically for applications. Every application is going to need a login, and those are the things that we're working on open sourcing. And then there's token standards where we can tokenize assets, and there's what's called the ERC20 token standard. So the next generation of this technology is going to have tokenizable assets in fiat currency, as well as land can be tokenized. And we've built these kind of token standards, or the Ethereum Foundation has built those standards. And I foresee kind of there's different layers of standardization.
Can you put a timeline or scale you as well?
Yeah, just to comment further on that, the idea, and it kind of ties back to the security aspect, but saying when will this stuff be like widely adopted and what would drive it to be widely adopted? The scenario I heard someone mention before that really landed with me well was saying, if you look recently, there was a big DNS hijack in the US that affected millions of people, right? So when you think about that, it was caused by IoT devices, right? We mentioned IoT here this morning. But think about why that happened. That happened because somebody went and bought some device from some retail outlet, and then they just provisioned it, and it had default things on it that were set up from the manufacturer, because that's the only way they can do it right now. But think about the future where there's actual transfer of ownership. If I go to a retail outlet and buy a webcam or something of that nature, they transfer the ownership of that. I don't input configuration on that anymore because I have an identity system on the blockchain that's anchored and knows who Kel is and knows what his Wi-Fi settings are, and that's all. So when I bring it home, it's already configured. When I sell it to Andrew, I transfer ownership. There's no more settings for me to be like, did I take everything off of that and give it to Andrew? I didn't leak anything because when it transferred ownership, the smart contract's able to execute that code.
I want to pick up on. I want to pick up.
Arifa, but just make a very simple, naughty comment that journalists are entitled to. You're sounding very romantic, but you have no idea how regulators can mess.
Okay. I just want to pick up on your basic question. So there are a few characteristics that any cryptocurrency is required to adhere to. The main of which is non-repudiability and immutability. So these are secured by certain cryptographic conditions, those being met by the protocol being resistant to any hacking. So even Ethereum and the DAO have been susceptible to hacks, and there is constant upgradation of the protocol to fix the bugs and so on. So any cryptocurrency, if it has to garner the trust of the people, should prove itself resistant to hacks, whether it is the 51% attacks or DDoS attacks and so on. The second is, apart from cryptographically being secure, how do you ensure in catalyst markets or two-sided marketplaces like Twitter, Facebook and so on, that you also have the mass adoption for it to be a disruption? So for cryptocurrencies, it is like this. Initially, the cryptocurrency means nothing. It has zero value. And then I give you a token. I say, Madhavan, you come and work on this, you contribute, and I give you some tokens. You say, Arifa, but your currency has no value. So the solution to this is, with time, the currency improves in value, and then me as a creator of this token, I also create a circular economy where people are trading in these tokens. So there is an inbuilt traction for the community to use these tokens. So we have featured a lot of such companies like SolarCoin, Decent, which is a decentralized platform, or Diamond Coin and so on. And these days, people, instead of going to the venture capitalists, which have been rendered obsolete thanks to Vitalik and Satoshi, they're doing initial coin offerings where they don't even have to give equity, they just sell the tokens for whatever value, and once the coins have been issued, you come in early with the incentive that if you come in early, the upside potential of your coins is much higher. So the trade-off is the earlier you get, the upside is being higher, and so everyone is incentivized with the gradual value.
Yeah, it sounds very nice, just like Kale, but I have to sound a bit of a warning there. Nothing really scales up unless the real economy, the financial economy, and what I now from today here on call the crypto economy come together. And which basically, as they say in plain English, show me the money. So I'm going to ask Rajesh this money because in the morning's presentation I found Rajesh as a wonderful intermediary between the crypto economy and the financial economy. Because you mentioned trade finance as a very low-hanging fruit, if I may use that cliche. What are the other low-hanging fruits that you see, so that let's talk use cases so that we go fast into something which Arifa explained purely in geek speak. A techie talking to a techie in order to avoid a VC, to me, is not a revolution. A revolution happens when the traders see, aha. So now tell me about it.
I think trade finance was the low-hanging fruit purely from the perspective of the amount of inefficiency that is there in the system there, as well as the amount of fraud it's prone to. The other key aspect that India can really adapt to is the whole aspect of rural payments. Rural payments. Right? If you look at the fact that we look at saying that we need to have this lease-link connectivity onto rural areas, and that will then bring payments and monetization across to the rural mass. It's not really true. Technology can ensure that you can have smarter wallets that rural payments can be done through. If you look at the Indian context from a perspective of what the government has already achieved, I would say it's smaller steps to be taken, which is why I put payments as number 3 in my list for adoption. Because when you look at the Aadhaar card, for example, and say that the Aadhaar card will now become an identity for an individual, it could also become a smart contract. It could contain a wallet. It could contain the fact that I go to my bank and I've now got top-up money on my Aadhaar, and then I can have devices across in the rural areas that will encourage the transaction management there. So I think that's another low-hanging fruit. And of course, I always think globally the insurance segment is a low-hanging fruit. Anyone who's got a great business model, get into it, because that's one place where there's huge inefficiencies. And any other place, when you say low-hanging fruit, if you find brokers anywhere, that's the point where you can get in with blockchain.
Thank you so much. He's outlined quite a few use cases. I'm reminded of the fact that when Jeff Bezos launched Amazon, he took on the book industry because he said it was the most inefficient, and therefore he could usher in an e-commerce revolution faster because the entry barrier was low, whereas he would have a head start by the time he got traction. And this brings me to a peculiar aspect. A lot of these ledger-based systems that we discussed today are essentially wonderful between two deal makers, but sometimes regulators can actually be a positive influence because they dramatically improve the social trust for adaptability. So I'd like Arifa and maybe Andrew to talk a bit more about regulation as a positive force.
I'll let Andrew speak about US regulation first, and then I'll come to Indian regulation.
So one that can dovetail both of your prior questions is the notion of land registries, where you could have kind of the tokenization of a parcel of land, and you could potentially, from a regulatory body, you could watch the flows of tax revenue and potentially impart liens. And then so basically, if I own this parcel of land, I have tokenized that asset and I own that token, and then other people can't. And I think that that's very important here in India or in other developing countries with kind of dark markets. For the regulatory bodies, I think the most important notion is that all of our business processes as we know it will probably evolve into smart contracts and state transition diagrams. And when that does happen, what we'll be able to do is program in regulatory. So the first part is that you'll have real-time audit rather than a quarterly look back, which will be a tremendous cost saving to entities.
Brilliant.
And you'll have real-time sensitivity analysis. The second notion to kind of the regulatory framework is that you can imagine regulatory bodies evolving into kind of software requirement givers to companies to comply with. And I think that that's going to be a paradigm shift, and I'm sure kind of the older regulatory personnel aren't going to want to hear that.
Exactly.
but you can imagine
auditing becomes as easy as swiping a credit card.
Right. Yeah. And then what you'll see is that they'll have read-only access to the environments.
Okay. I've had the privilege of interacting with RBI over the past 1 year, and we also had a very erudite economist, Dr. Rajan, leading RBI, who had a special interest in cryptocurrencies, and he believed in the future of cryptocurrencies, and he thought, of course, they'll get safer over time and more adopted and so on, and they'll be the form of currency transaction in future. That's what he said. As for the concerns of the regulator, they have multiple concerns. One is, how does cryptocurrency compete with fiat currency as a monetary supply tool, or a tool to control inflation, or a tool to affect interest rates and so on? Because as you know, India is a very sophisticated, highly regulated market. We have some very draconian regulations like FCRA Act and so on, and we have a very sophisticated equities market with brokerage and Dalal Street having had its own share of controversies. So regulator wants to see, first of all, how this affects the supply in the economy, whether government can control it. When I told them, you cannot, they were very surprised. So a multidisciplinary team of RBI they had put together to study blockchain had different concerns. And then the technology, of course, besides the Bitcoin, which is a regulatory concern, the technology, of course, is beyond them, because you can use the technology, but then they have to study the impact on the auditability trail, whether it affects the cushion or the margins you have for reserves, cash reserve ratio, for example, or how much are banks required to adjust these ratios because of the increased efficiency or the increased efficiency of capital, because the more transparency there is, the less of surplus you need to keep aside for contingencies that you have not foreseen. So when you are more able to accurately predict an outcome, then the margin reduces. So it releases a lot of capital, so there is a lot of scope for capital efficiency. Some estimates are saying that banks are able to save $20 billion just for KYC alone. So all these are regulatory aspects, whether you can trust eKYC based on blockchain, whether you can do trade finance based on blockchain, what are the grievance redressal mechanisms if you have blockchain, does everybody need to adopt blockchain so that somebody complains, you have some safeguard mechanisms in place. So the concerns are multiple. They are in the initial stages of comprehending this technology. They are making efforts towards that, because they know that once it is adopted, they don't want to be caught lagging behind in the curve.
That's interesting. We have just one question for Kale before throwing it open to the audience. Kale, from what Arifa said just now, I think one other building block in this revolution could be developers catching on. To a common person, it's always like, look what they did with the iPhone. Is it possible to have at least a quick B2B adaptability of various kind of apps based on this technology as you see it? How excited do you think developers are or can be in developing compliance or other based things? She was talking about a figure of $20 billion, and surely developers will need to step in to make it really work so that they can show the money to people.
Yeah, I think there's a couple different things there. From a developer ecosystem standpoint, certainly the Ethereum community as well as the Bitcoin community are very large on the internet. But when you go to an enterprise, and when we talk with even executives at Microsoft about these things, going out to an IRC channel or Reddit or something is interesting to grow an ecosystem, but it has to mature to a point where people have avenues to go to build this stuff. Open source is huge. Microsoft has obviously over the last couple of years embraced open source, and the open source community has led to better products, and I think that will continue, and that will continue to inspire the developers to get involved. It's not, I have to go with a ton of money to get into this thing. I can actually come in from an open source standpoint.
Thank you for reminding me that developers think differently about life. That brings me to the audience. Yeah, please, for any of the panelists, if you can be brief. I'm sorry, we've just probably 3-4 questions at the most, right? Yeah.
Yeah, I don't have a question to anybody specific, but it's an observation. If you look at the blockchain, two things are being identified as the key things of a blockchain. One is immutability and the second one is transparency. Bitfinex, the entire exchange was brought down in Hong Kong because of an attack. And
that's a pretty powerful comparison of what we're able to do with today's technology versus kind of capital markets implosion 2008.
So, first of all, what I wanted to start off by pointing out is that decentralization as a technology in computer science is not a new idea. So, we often talk about blockchains, Bitcoin, Ethereum, as though the age of decentralized systems started off on January the 3rd, 2009, when Satoshi Nakamoto launched the Bitcoin blockchain for the first time. But in reality, as very many people actually know, decentralized systems as a concept existed for quite a long time before then. Even going back to the pre-computer era, a lot of economic activity has been decentralized almost since civilization began. If we look at insurance today, well, it seems fairly centralized. People buy policies from insurance companies. If you turn the clock back to the 1800s, what you might see is something closer to mutual insurance, when you had groups of ship owners that would come together and agree, without necessarily relying on any centralized intermediary, to all agree to pay for each other's costs if one of their ships sank or got attacked by a pirate. So, in the age of the internet, decentralized systems have also been around, and they've been around almost since the internet began. So now we have internet forums. When the internet first began, we had Usenet. After that, we started creating decentralized networks for sharing files. We started creating decentralized networks for communication. Decentralization as an idea, even in technology, already actually had quite a bit of market share.
What's possible here in India, what's possible here on a community level, what's possible here in terms of how can we directly address some liquidity issues here with the currency crisis. So I'm hoping at the end of this, you'll be able to go home, or you'll be able to give it to your son or your daughter, or even right now, and start being able to apply some of the stuff we're learning here. And I'm also hoping to give you a few secrets and in the trenches kind of information that you might not have heard of or thought. So hopefully you'll get something out of it.
Yeah, I'm having a very interesting topic here, how blockchain is going to be adopted for retail payments in the demonetization era. I will be talking about demonetization for the overseas visitors here and the VUCA world after demonetization. And being a session late in the evening, I want to make it as light as possible. And some early indicators after how demonetization has happened and how India is coping up with moving towards a digital economy, the 4 early pillars. And I'll be covering the blockchain part, where all we can use it.
Subhash is not speaking.
Once again, take this opportunity to thank our sponsors, Cryptocarbon and Microsoft. We have a brief pitch by Cryptocarbon now by Jose Manuel. We're just going to talk about the cryptocurrency.
Good afternoon. I'll make it really quick. Introducing you to Cryptocarbon. It's a cryptocurrency based on Ethereum blockchain platform. It's a new concept. It's a new idea we're trying to apply onto cryptocurrency, where we're trying to help you earn cryptocarbon by shopping. We'll get into the details. Before we do get into how that works out, let me take you through what's Cryptocarbon. What is it? How does it work? What does it work on? What is the concept? So on and so forth. So Cryptocarbon is a cryptocurrency that's been developed on the Ethereum platform, blockchain platform. The idea of integrating it with current cash platforms is what enables shopping to earn. And that's one key feature of Cryptocarbon, where we are trying to use cryptocurrency for day-to-day consumables. Thus, it becomes something like a customer-oriented or a consumer-oriented cryptocurrency. How does it work? Blockchain maximizes security, and the concept of being able to use it on an existing cash-based platform for consumables makes it convenient. The issuance is one of the most sensitive areas, the issuance of the currency, one of the most sensitive areas that we look into, and it would be based on a very simple economic philosophy of the products and services that we will be able to offer in return would be the criteria based on which the issuance would be governed. Cryptocarbon is a currency that can be earned as cash backs, referral bonuses, so on and so forth. The technology or the process that we are trying to follow for Cryptocarbon, ideally based on Ethereum, the Cryptocarbon works on a wallet, cryptocarbon.co.uk. The wallet would, in the early 2017, which is the next the coming year, in the first quarter, we are launching it in the open exchanges or the exchanges, enabling it to be a part of the exchange, where then the value of it would be completely controlled by the demand and the supply. The wallet enables you to engage in several different types of activities with cash platforms that are currently operating with a solid customer base. So these cash platforms will now accept Cryptocarbon. From technology or the process or the idea, we are moving on to the usability and the benefits of Cryptocarbon. As a currency, as a digital currency, we would be incorporating a large network of services and products that would operate using Cryptocarbon, which ideally means a lot of services that you pay for, a lot of things that you buy today for cash will now be operating with, or you could transact using Cryptocarbon. The technology is the decentralization of the blockchain technology that allows us to decentralize, enabling security. It's the same technology that works for us here. For example, I'm sorry, can you go to the next slide? An online platform where businesses and individuals can promote. You would have heard of Open Bazaar, which is an open platform, not based on a group. It is just an open platform where you can trade. We're working on a market platform where people can trade using Cryptocarbon. The main benefit of Cryptocarbon is that it is transferable through between users using the wallets. It can be converted to bitcoins, cash, or you could use that to purchase products and services that is currently being networked into the Cryptocarbon group or the Cryptocarbon currency. We're launching it in the external exchanges in the first quarter of 2017, which would then, the market would be taking care of the value of the currency. Currently, we are operating within the internal integrated cash platforms that are working with us right now. It's $1 for one Cryptocarbon. However, that's the internal network that we are operating under, not the exchanges. However, from 2017 first quarter, it's going to get into the exchanges, the value would change. From an issuance perspective, Cryptocarbon is ideally based on the services and the products that are available in return for the Cryptocarbon that you would be using. And that is the policy that governs Cryptocarbon as a currency in terms of its issuance. During the launch, we are launching 70 million Cryptocarbons in the first quarter of 2017, and thereafter the issuance would be up to 30%. That again would be, the governance would again be based on the demand and the supply. Let me just put you through what the idea or the vision of Cryptocarbon is. We're trying to make cryptocurrency the currency of the people, a currency that we can use to transact for our day-to-day uses without having to probably get into mining yourself. Out of the large number of people who are getting into cryptocurrencies, there is an amount or a percentage of people who are focused on the potential of earning in cryptocurrency. And that's exactly where, so ideally we have a very ambitious plan. Currently we are at, I'm talking about the integrated cash platforms we have tied up with, allows us to sell Cryptocarbon at $1 for one Cryptocarbon. By the end of 2017, we are hoping to get to 10,000 users, assuming we'll be able to sell it at $2 in 2017, towards the end of it. Which would then, we're trying, in 2018 our target is 100,000 users, going to 1 million in 2019, and 10 million in 2020. Henceforth, it cannot be, it entirely depends on the market and how the currency performs within the exchanges. The looks gives me one question. I'll just try to answer that question and then move on and close the presentation, and that is, this is achieved because the idea can be achieved because of the integrated cash platforms that are ready to transact in Cryptocarbon. I hope that answers a lot of questions that you might have towards the end of this presentation. We have tie-ups with, these are the BPay, B1 and BLife are the three platforms that are currently accepting Cryptocarbon. Yeah, thanks a lot, and we hope you would be able to respond to us, give us feedback, criticize us, and lead us to evolve this into a currency that makes a lot of sense to people who would like to use in their daily life. You could email us to info@cryptocarbon.co.uk. Thank you.